EIF is often described as Europe's quiet giant, everywhere in the venture ecosystem, yet rarely fully understood. Adem Yakisirer works inside that machinery at the European Investment Fund, where LP capital, policy goals, and fund economics meet. In this talk, he'll unpack why EIF exists, how it actually operates, and whether it should be seen as a catalyst, competitor, or something else entirely. Please welcome Adem Yakisirer from the European Investment Fund.
If we go out here and ask entrepreneurs who their first investor was, probably they will remember. If we ask the same question to GPs, they would also like to remember. But if we turn the table and ask, but what do you think? Which kind of infrastructure you would need to ensure that you have an investor when you are an entrepreneur, or you have an LP when you are a GP? Actually, through our more than 1,600 fund managers and deploying more than 50 billion over 3 decades, there was an invisible hand, an invisible player that ensured that the infrastructure, that the ecosystem is there. It's helping founders, it's helping GPs and LPs. And today, I would like to make that invisible player more visible so that at the end of this short presentation, you have a better idea of who we are and what we are. Ladies and gentlemen, proud to be here. My name is Adem, working for European Investment Fund. We are the largest investor in Europe, investing into SMEs, scale-ups, mid-caps through our financial intermediaries. How do we do that? We basically blend different sources from different channels. Of course, we have public resources. We blend those resources with private ones, and we execute that strategy through our partners. Who are our partners? Our partners are fund managers, our partners are banks and other financial intermediaries, which help us to reach out to successful, innovative, and breakthrough SMEs. And we are proudly doing this for the past 3 decades. Obviously, when we are doing this, we don't crowd out the private capital. That's not our intention. Our intention is very clear. We aim to provide incentive for the private capital so that if there's a risk, EIF takes the first mover risk and we bring other investors in. And how do we do that? We basically assume different roles across the different stages of the market. We can be a market builder, we can be a market catalyst, or we can play a market access role. What does it mean? It means that depending on the need, depending on the market, depending on geography, we back first-time teams, we back emerging managers, or if there's already a tangible talent, then we help those emerging managers to break through the market. If we move up to the value chain, then we have established managers, we have blue chip managers, then we help them to shape the strategy that will be definitive for the European tech market. And obviously, this provides a pan-European geographic reach that we have today and that we are building on it to assume or to implement the key policy areas which are in line with our shareholders' objectives and the needs of the European people. And how do we do that? We do that by covering the different segments of the financing ladder. If you look on the left side, you see the technology transfer funds, which is mostly pre-seed, and it comes with, of course, higher risk, and then it goes all the way up until the pre-IPO. What we call is a financing continuum that EIF aims to build and has been building over the past 3 decades. And what is the objective? The objective is very clear. The entrepreneurs, when they are scaling, they don't fall into cliffs, funding cliffs, neither do the GPs. So that when the company scales, there is a successive funding rounds and financing rounds that is available at their will. And how did we do in terms of numbers? If you look at this illustrative graph, and this is actually based on our actual data, EIF has been catalyzer, a consistent, a counter-cyclical, because you can see that it's volatile, We have been there for the entrepreneurs. We have been there for the GPs, especially in tough times. And on average, we have leveraged 5 times the euro that we have committed. And EIF has been an anchor player, a trustworthy player, and a collaborator for the industry. And if you look, how did we do that geographically? Let's move quickly. A few dots in a few countries, and then we move on 2000, 2005, 2010, 15, 20, and 24. We see very diverse, very vibrant, and also quite lively map there. And that is not by chance. That was intentional, it was studied, it was worked, and EIF has committed to achieve the picture that we see at the end of 2024. Is it enough? Of course not. There's much to do. There's much to achieve. And this just shows our growing commitment and growing investment into European tech scene, into European markets. Let's have a look at the trajectory. So we always hear that Europe is behind the US, which is true in terms of VC investment, in terms of private capital investments. But one thing that we should keep in mind, how far Europe has come over the past 10 years. If you look, the tech value created by Europe, it was 43 billion in 2014, and to 2024, it was 426 million, 10 times more. And if you compare it with US, it's 5 times. On absolute figures, obviously, it's around 2 times, maybe more than 2 times less than US. But on relative terms, Europe has achieved 10 times more value creation, whereas US has achieved only 5 times. That's a story, I think, that needs to be spread, and that needs to be maybe considered more positively than the current vibe in the market. And I would like to show you one case study, a case study that is super important to reflect what EIF has helped. Revolut, one of the crown jewels of the European tech scene, and what you see on the graph is the evolution of Revolut's valuation, starting from seed, Series A, Series B, C, D, E, and the secondary sale that happened last year. And it evolved from 10 million to somewhere around $75 billion. What is interesting about here is that you see it was not a one fund, or one funding round, or one strategy. You have pre-seed seed funds, you have early stage funds, and you have scale-up funds. And Europe was benefiting from this financing continuum, and EIF backed these fund managers. But there's also one stark picture here. The stark picture, once the value creation accelerated post-Series C, there is unfortunately only one fund that was backed by EIF, which shows there's a need for scale-up financing, there's a gap for scale-up financing, and EIF is committed to fill that gap going forward. And how are we going to do that? So obviously Europe has evolved, so has EIF, and there are some key thematic areas that we see are important for the European economy, for the European people. What are those themes? Space. Technological sovereignty has been mentioned many times since morning, and it will be mentioned even more. And as such, we consider space as an important area for fund managers going forward. The second one, life sciences and health. Biotech and biotech companies and developments are driving force behind much of the value creation in Asian markets and in US markets. And as such, this will be area that EIF would focus going forward as well. Semiconductor chips, semiconductor technologies. No surprise here as well. We see much of the geopolitical shifts and discussion today are also ramifications of these areas. Who controls these important niche segments? Industrial technologies, robotics, automation, industrial efficiency, this will be also extremely important for us. And finally, defense, which was maybe taboo for EIF up until last year. But starting from last year, we doubled down our commitment, and we will increase our most likely influence in this area as well, so that Europe regains its defense capabilities that has long been neglected. What does all this mean? This group of people, of course, you each have different interests, potentially also different questions. What EIF means for entrepreneurs is a continuous funding opportunity. At least when you scale, when you grow, the market and the ecosystem should offer you opportunities to scale your business, to continue growing, and bring the prosperity and wealth to the European continent. I'm sorry for the font. Now I realize that it's not very visible. If we move on, of course, for funds, our long-term partners, we help them and they help us. We bring stability, we bring anchor role, and we help them continue finding the best entrepreneurs, even in the tough market environments. And if we move on to other LPs, what do we do for them? This was also mentioned many times. Some LPs find it difficult to enter into this asset class and sometimes allocate enough resources. So EIF's involvement in funds help them at least de-risk some of the assessment they are undertaking when investing into fund managers. And finally, for the corporate innovation institutions or corporate LPs, of course, we help them and we offer them an innovation pipeline that is strongly linked with their objectives to remain competitive in the market. We don't do drones, or we don't build spaces, and we don't code, but we at least ensure and try to ensure that people who do this have enough financing, have opportunities so that they can stay in Europe and they can become successful in Europe. Thank you.
Adem, I want to ask you one question right up in your face. EIF is an absolute behemoth. You've backed 1,600 funds. Some would say that we're becoming addicted to EIF. Is that true?
Good but provocative question. Of course, when you look at the figures, you obviously think that market is very much dependent on EIF. Actually, how we see EIF as a stitching different bits of the market. If EIF is vanished today, potentially, so if you look at what could happen, there could be two implications. The first one, for the blue chip managers, for the established managers, they would continue fundraising, they would continue investing. But the impact would be much more visible on the first-time teams, emerging thematics, as well as some underserved geographies. So EIF essentially completes the market. Would the market collapse? Of course not. But would the market be complete? Most likely not. As such, what EIF offers is diversity, is a continuation, as well as to ensure that different parts of the market is not left behind. And as such, we could consider EIF maybe more like an infrastructure player that provides the ground so that the entrepreneurs and the entire private market can scale up on it, but rather it's not an insulin that somehow prevents the entire market to function properly.
Mia, you're a partner at Superseed, one of Europe's seed funds. I'd love to ask you, from the outside as a GP looking in at EIF, how have you at Superseed thought about EIF, and how do you hear the talk of the town, so to say, when it comes to EIF?
Yeah, so I think we talked about whether securing funding from EIF is like a golden ticket, and we talked about I see it more like a hunting license, if that makes sense. So if you have institutional backing from EIF, or in our case we have British Business Bank, it kind of gets you through the door, but it won't get you the check. It kind of sends a signal to the market that you've had institutional investors looking through all your things, and you passed that test. But all the other LPs still have their own processes, their own internal politics. And so far, having BBB in our fund hasn't secured us any check. It's just gotten us through the door.
There's a counter argument on that, which is, of course, that if you don't get it, for whatever reason, it can be more difficult to then get through the door because it's the signal to private market LPs. Now, wait a second, you don't have EIF? Like, what's going on here? or in Denmark it would be IFO, or in the UK it would be BBB. Have you ever considered it that way?
You see lots of funds raising without having any of the institutional LPs on board. So no. As I said, I think if you do get them on board, it can kind of open more doors for you. But those doors can be opened without them as well. It's just more work. Yeah.
Adem, can you talk a bit about how you steward that role in the ecosystem?
For us, of course, it's a big responsibility. Sometimes when we decide not to invest into funds, we always receive the question, but how am I going to explain this to other prospective LPs? For us, what matters the most, we mentioned this leverage effect, we mentioned the signaling effect. For us, what we would like to at least ensure there is a continuous and steady participation from other institutional LPs and private LPs into the asset class. Of course, EIF is trying to ensure that role, through several, rigorous investment assessment processes. But ultimately, we cannot serve the entire market. There will always be some players who will be unfortunately rejected. But it doesn't mean that they are not good managers. Because we assess for that particular fund, for that particular strategy, and for that particular moment. And if that moment is not right, it might have nothing to do with the fund manager. But at least we try to pass that message as nicely as possible, and we even offer our support for them to communicate with their future and prospective LPs, so that their story is not presented in a wrong way. Let's put it this way.
I'd love to ask you a bit about market distortion. I'll start with you, Mia. Having a player like EIF, which is politically motivated, so to say, meaning that you have places where you want to see capital going. As an example, deep tech is a big focus, defense and so on. Does that sometimes act as a bit of a too strong carrot for managers?
Well, I think in our case specifically with Superseed, our investment thesis is physical AI, which means that we invest in software that empowers the physical industry. So when Europe talks about sovereignty and resilience, we were either lucky or we were kind of there already. I think I want to be honest, if EIF came out tomorrow and said, now we're only backing consumer applications, we wouldn't pivot. We couldn't afford to, because we're set out to build a 15-year track record. And if you kind of blow in the wind, with 3-year policy changes, you can't really build that track record. So I think as a fund, you kind of have to stick to your thesis if you want to build that track record.
So, Adem, let me ask you a different question, or the same question with different words, which I think might make you answer differently. I would be surprised if you have not seen managers come back with strategies you had never thought they would implement based on what they said last time they were around. Mm-hmm.
So that's a good question, and we have seen it over the past couple of years. So in 2020s, it was climate, and now we see some of those fund managers coming back with different strategy. But obviously here we are not prioritizing, the policy objectives over the financial returns. Ultimately, the technology sovereignty has become the market reality, and the markets are being shaped, if not immediately, are being shaped, and the medium and long term will be shaped by that reality, and it creates an opportunity. And it's normal for fund managers to grasp that opportunity, because even maybe today the commercial demand is not here, it will be there. This is what we have done 10, 15 years ago when European software was still underserved. EIF took bet. We invest in fund managers who became extremely successful, and we have seen many good examples of those fund managers who backed potential technology champions that Europe has basically in the house today. And as such, we obviously don't expect fund managers to become policy instruments for us. We are telling them the geopolitics and the world order is being changed, and of course Europe cannot remain spectator to that. Europe needs sovereignty in those areas that I mentioned, I will not repeat, and EIF will need competitive fund managers who are able to go and win those spaces.
And I still want to say, if you change your thesis completely from one fund to the next, you're going to be called out on that from the LPs. They want to see some track record and they want to see experience in that sector. So I think I don't know. I don't know if it's a good strategy.
Well, I would say I've definitely seen people put on new makeup. Thank you, everyone, for being attentive to the panel. Thank you, Mia. Thank you, Adam, for joining us.
Pleasure.